Today, Bitcoin falls as China escalates trade tensions with the United States. BlackRock CEO Larry Fink says tokenization could bring trillions in foreign funds to U.S. markets. And Richard Green of RootstockLabs breaks down what's next for the crypto market after this current bout of volatility. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies facing a fresh wave of selling pressure after China escalated trade tensions with the United States overnight. Bitcoin fell as low as $109,000 this morning before bouncing back. At noon Eastern, it traded at just below $113,000. Ether is also in the red, trading at $4,089. Solana is a bright spot though, climbing more than 2% and crossing above the $200 mark. Okay, let's talk about the top stories. BlackRock CEO Larry Fink thinks tokenization could be a boon for U.S. markets. Speaking with CNBC's Squawk on the Street this morning, Fink said bringing traditional assets onto the blockchain could drive investment from funds currently sitting in crypto wallets outside the United States.
But there's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize an ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years.
BlackRock has been the big winner when it comes to spot Bitcoin ETFs. Its IBIT fund is sitting around $100 billion in assets under management. Next, the Department of Justice just seized billions worth of Bitcoin tied to a Cambodia-based pig butchering operation. In a press release this morning, the DOJ announced the Eastern District of New York was charging Chen Ji, founder and chairman of multinational conglomerate Prince Holding Group, with wire fraud conspiracy and money laundering conspiracy. The department alleges Ji directed Prince Group's operation of forced labor scam compounds, where individuals held against their will engaged in crypto investment fraud schemes. Ji, who is also known as Vincent, has not been arrested. The Eastern District of New York also filed a request for its largest forfeiture in DOJ history, seizing roughly 127,000 Bitcoin, worth around $15 billion. Pig butchering schemes are one of the largest crypto-focused scams, growing 40% in 2024. All right, let's turn back to the markets for our main story. Crypto World's Jordan Smith spoke with Richard Green of RootstockLabs to get his reaction to the current trade-driven volatility in the crypto market.
I want to start with your reaction to this current trade-driven volatility in the crypto market. I mean, we saw that major slide on Friday after President Trump called out China on social media. Then we got the recovery after he softened his tone. And now we're watching this new swing after China imposed sanctions on a U.S.-linked South Korean shipbuilder. I'm just wondering why we're seeing such pressure on the crypto market from these trade headlines. What's your reaction here?
Yeah, absolutely. I think that the past 5 days have seen many movements in different directions. And like you say, the main driver was that initial comment by Trump in terms of the tariffs, which drove prices not only on crypto, or not only on Bitcoin down, but on crypto as a whole. I think that over the weekend, you saw that slight recovery, and now the new news that is coming out. So I think that we probably got to look a little bit about why the dip has occurred, and why the dip has occurred is also driven by why there was the increase to the all-time high over the past couple of weeks. And I think that what you were probably looking at was that previously within Bitcoin, it was a spot-driven market really from April up until prior to that. And then it moved very much into a futures-driven market. So a large open interest increase, that meant that there was more leverage going into Bitcoin in itself. And so obviously when there's more leverage and something like that happens, there starts to be liquidations. So people were either hitting stop losses or being liquidated fully in regards to all of the price decreases. And so I think the dip from an all-time high of 12% is not that huge. It is something that obviously wiped a lot of people out, but it is not compared to other times that we've seen that. And I think that why is that now the case that it's not such a huge dip? You're looking at the other macro factors that were driving it, such as dovish Fed policy in the US, the announcement of decreasing in interest rates, people are looking at it as a debasement trade. So a weakening dollar, they're looking to make sure that their money isn't losing as much if they were just sat in spots. You're seeing a huge amount of ETF inflows as well. So the institutions have been coming in over the past number of months into all of those different areas. And so whilst there was definitely a sell-off, what you're seeing is that dip has probably been softened a lot by the amount of retail in the space is probably not proportionately as great as it has been in the past.
Yeah, you're hitting on so many topics I want to ask you about. I think I want to first start with whether you see these current moves as sort of a reset to the market or a deeper risk to Bitcoin or crypto broadly. I mean, obviously, we're talking about moves over the past few days, but if we look long term, Bitcoin's up around 20% so far this year. Those new record highs you mentioned were just this month. So is this about a reset and some of that leverage that you were talking about, regardless of the trade tensions that are going on?
I think it absolutely is. I think it absolutely is. And I think that sometimes that's not a bad thing for a market. I think that as a market goes up in a bull run, people get
very confident. And so they start to leverage up and they start to take bigger positions. And when that occurs in any market, it doesn't mean that it's always the best thing that it's over leveraged, right? So if you're looking at options trading, if you're looking at the futures on the CME and things like that, then that can clear out a lot of that. And then, as we said before, it means that the underlying base at around this 111,000, 110,000 is a much stronger low than it was in the past. And so I think you start to be concerned when that price decreases further, because what you're probably seeing is that those institutions and those other larger investors who came in at around a price level of 100 and 105 or higher, they're starting to then feel that their sentiment is being challenged and their conviction is being challenged. And then you might start to see a slide away from that. But I think that there is a base within this space that has cleared out more of the leverage and more of the futures. You've seen that open interest declining pretty heavily over the past few days, rather than it being, this is the start of a bear run. As opposed to what you're probably seeing in the altcoin space, which took a much heavier hit. And there's probably wider conversations to be had around that versus the strength of the Bitcoin market.
I want to go back to something you said about sort of where Bitcoin fits as an asset class as people are looking at it for an investment. Over the past few days, we saw this pullback, and I'm wondering if it rattled the idea that Bitcoin is a safe haven during times of volatility. As I mentioned, it certainly has had a good run this year, but it did face that dramatic sell-off. So is it still that safe haven that people have said it is?
I think so. I think that you're always comparing it as that digital gold. And when you look at the difference at the moment in the past week between Bitcoin and gold is continuing to grow. And of course, Bitcoin has had that sell-off. But I don't think that Bitcoin, whilst Bitcoin and gold are probably in one of the highest correlation that they have been at the moment, what you're probably seeing is that people are seeing it as that safer haven, as people have been liquidated from altcoins, and even one of those larger altcoins, Ripple, Sui's, and things like that. There's probably been more Bitcoiners made out of this than there has been in the past, where people are going, okay, actually, I'm going to move away from that side of things and move into something that had an initial 12% dip and has recovered to, I think, 10% around about now, and is still holding steady within that space.
I should mention on the flip side of some of the pullback that I've been talking about, Bitcoin ETFs have seen consistent inflows despite the volatility. BlackRock's IBIT fund saw positive net flows every day so far this month. What does that say about institutions using Bitcoin in their strategy? And does it speak to this thing that you're talking about of maybe looking away from the altcoins and looking to Bitcoin in whatever vehicle that may be?
Huge amount. I think in the ETF space for Bitcoin now, it's something like $50 billion that are sitting in there. And obviously BlackRock's primary IBIT fund is kind of the leader in that space. But I think that what you're seeing with institutional capital is over the past number of years, that's been accumulating and has been growing in the types of institutions that have been doing it. So it started off predominantly within the Web3 side of things, and then asset managers who are getting a bit more familiar with it started to come into Bitcoin, and then you're starting to see it sitting on treasury balance sheets. You're seeing it sitting into sovereign balance sheets and things like that. And so I think that it provides a regulated, accessible on-ramp
for these institutions to move into the crypto space and gain exposure to that. So I think what it is it's been a widening of the type of institution who has become more at ease with Bitcoin as an asset class, seeing that the lows are not as low and the highs are less volatile and going up, even though we've seen what we've seen today.
Okay, that's all for Crypto World today. We're back again tomorrow. We will see you then.